Mhm. Okay, good morning, fams. How are you doing? Welcome to today's class and happy weekend. Hope you enjoyed profits we had last week. This week that just passed, hope you all enjoyed the profits. We made good profits. Yeah, last week we just sent out 2 signals and both of the signals were profitable. So hope you guys are enjoying your profits, and yeah,
me too.
let's dive into what we have today. So I introduced you guys to the charts last week.
Yes.
I introduced you guys to the charts last week when we talked about TradingView and how to navigate through TradingView. So today, which should be the last class, because this is a free content I'm just giving out. So today I'm going to teach you guys how to use some of these tools and create a strategy of yourself for yourself, and how to also enter and execute a trade. So that's what we are going to be looking at today. And then after that, you all can work on it yourself, work on improving yourself. You all can work on improving yourself with it. You learn and research on your own and get the knowledge. So if you are seeing my screen, if you can see my screen, you can drop a 1 on the comments. So, but if you cannot see my screen, let me know. Okay. So,
When you need them now, you know go see them.
so let us step right into it. So let's dive into the action. So as you can see on my screen, this is my phone. As you can see on my screen, this is my TradingView. This is my chart. So we are going to go right to it. So you go to markets and you'll be able to see. You are going to see the entire market in markets. You see crypto, you see stock, you see indices, you see synthetic, you see metals. So whatever you want to see, it is in markets. You get to see it. It's in markets, you get to see it. Every day my network will just be disturbing. Bear with me, guys. The network is bad. This is the area I'm in. It is my area. That's why the network is bad.
Show me size where I go cut this one. Then you go dey shout for me.
So you can choose whatever, either crypto, futures, forex, anyone. So if you're a forex trader, you choose forex. I started off at first just trading crypto. Back then I was trading APT, Amatic, and then I was losing money back to back. So I decided to jump into forex. Masha. Now I trade forex, crypto, indices, and metals. So those are what I trade for now. I'm practically everywhere now. But in this business, you don't need to know everything. You don't need to be everywhere. So I just tend to pick one from all of them and I trade it. So that's what I do. And by God's grace, I'm seeing small profit. So I should have started with you guys, but network is disturbing and this thing is
like say lecture dey like say she dey na small girl
it's very slow. Sorry about that. If you can hear me, please drop one on the chat. Sorry guys, my network is very slow. It's because of the area I am in. Reduce your movie volume. It's because of the area I'm in. Hopefully we can just manage it and see if we can still learn. We can still learn from with the pawn network.
Then this thing will come back on me. Say, if you start saying, you start committing to then this one will cover. The ones where they do one corner, they start at least this place, this line now we okay.
Please, you should not be angry with me. Network is bad. It's just loading since nothing is working. MTN these days now rubbish. And this place I am in only. Okay. No problem. Well, no problem, Mr. Isaac. But the class will still go on, and I guess I'll just record it and share it to the chat, and later you can watch it on your free time. So different ways to create a strategy depends on what you want to use. You might want to use your moving average. You might be someone that uses indicators. You might be someone that is just a pure price action trader. So it depends on you and what you want. So I'm going to give an example of using indicator and price action together to create a strategy. So there are different indicators. We have moving average, like I showed you guys the other day. We have moving average, we have EMA, would be 20, 50, 500 EMA. We have Bollinger, different indicators. So I want to clear my screen and have a new chat. So we are going to add our indicator. Which indicator are we going to use? Let's use the moving average indicator. I clicked on it and it have appeared on the chart. As you can see, this blue line going high and low. It is our indicator. So with this indicator, if you can see, let's zoom in. If you see the indicator, whenever markets come to the indicator, there is always a reaction whenever markets come close to the indicator. That is just how you trade it. So if they say the market went up from here, tested the indicator. So the indicator held it and it shoot up again. So how you trade it, if price is above the indicator, you'll be looking for more buys. That means once price is above the indicator, you'll know the market is on the upside, so you'll be looking at more buys. But once price breaks below the indicator, you will start looking out for sales, because now price will be below the indicator. So you wait for the test on the indicator and you'll be looking to sell the market. That is just how you trade the moving average. So you can set it on different. We have 9, 20, 50, 500, whichever one you want to use. You just come to your settings and you fix it. You can study more moving average to do that. I'm just here to show you guys how to create a strategy that works. So now this indicator here is our 9 moving average exponential indicator. Look at it, EMA 9 close is our 9. You can change it to 20, any number you want, but let's leave it at 9. So like I explained, whenever market tests it, you look for buy. That's if it is above the indicator. But when it's below the indicator, whenever it tests it, you look for sell. Let's check out some examples. I'm looking for it. Let's use our search to search for the tools that we want. I'm looking for my path, so this is it. So there is the importance of search, like I taught on the previous class. If you forgot where to locate the tool, you just go to your quick search and search. So let's say we want to take a trade using only this EMA 9 indicator. As you see, price moved up, price came down here. Now price is above the indicator. What are we expecting to buy? So we enter buy from here. What did the market do? The market went up. So if you took a buy trade from this point to this one, you made money. So there is it. So now price broke below the indicator here. As you can see, there's a close below the indicator here. So now with the mindset that whenever market is below the indicator, you sell. So now if you now wait for price to retest, which is the tested indicator here, and you go in for a sell, you lose money because the market went up. So it's a loss there. So which is why you don't only use one reason of entering into the market. That is what we call a confluence. You look for different reasons to enter the market. So here just the EMA 9 failed. So which is why you need more confluences. If you had more confluences, maybe other reason would have told you that it wouldn't work. So but on other place, the sell failed here, which he bought. So now market is above the indicator. He tested it again, he bought again. So that is just how you trade it. Once the market is up on top of it, you look for buy, you keep buying. You look for the test buy, you keep buying. That is just how it works. So that is how your EMA work. Now we are going to look for, this is an indicator. We'll look for another confluence, which is, let's say, trend line. So now this is just price action. So it's where is the market facing? That is where the market is facing, that is where you draw your trend. And in order to draw your trend, you don't just draw your trend anyhow. There are rules in drawing your trend. Everybody has their different rules. But for me, what I do is at least I must see the market making two touch. That makes my trend a valid trend line. So I must see the market make two touch before I consider the other trend valid. And if the market breaks the trend, then the trend is invalid. So, and let us draw the trend. So, this is our trend line here. It tested here, which is 1, tested here, which is 2. So this trend line is valid for me. And then if I want to take a trade, I'll wait for market to touch the trend line again before I will get into a trade. And market came here, touched the trend line. So if I want to take a trade, I'll just come enter my position at the touch of the trend line here. My stop will be below the previous stop. My stop will be below the previous stop, and I will choose my take profits at the next structure, or if I'm risking one, I target 2. So as you can see, I'm risking 1, targeting 2. That is it. 2 risk reward ratio 2.05. That is 2. Some people use 2.1. Anything want to use. So as you can see, this market tested the trend line here, and it did not hit the stop loss. Look at this, it moved up with your take profit. So using this rule of trend line, it is favorable because now you have seen the market hit your take profit, so you are profitable on this particular trade. So that's just how trend line works. So whenever market breaks the trend line, I consider it invalid. So as you can see, let's continue with this trend. As you can see, after getting into that position, market broke the trend. So, but it took our profits. So now it is invalid. I will no longer use this trade. What I will do the next time I'm coming into the chart, I will come in, I will delete this trend, and I will pick up my trend 2 and look for another valid trend line. So let's look for another valid trend. 1 touch, this is 2 touch. So at this point in time, what I am waiting for is, because what I'm waiting for is another touch, 1 touch here. This is the second touch here, making this trend line valid for me. So now I'm waiting for markets to test it again, give me an entry, and I will continue buying this market. So if I buy it, I'll put my stop below the previous stop. Market tested it here. You get into the market here for a buy. I'll put my stop loss below the previous stop, below the previous low, which is here, below the previous low. This is the previous low. Put my stop loss there, or you can also use here as your previous low, whichever one. So using as my previous low, I target 2.1 risk reward ratio. So now market, as you can see on this setup, market did not go to hit our take profits, which is target. Instead, it came down and hit the stop loss, which means we lost at this setup. So Nothing is 100% certain, which is why you have to backtest whatever strategy you set up for yourself and make sure it's profitable in the long run, because this is not a 1 day, 2 day game. It's a long run. How long can you last in the game? So now you see that we now have EMA and trend line. We tested trend line, it worked once, it failed the other. We had tested the moving average, it worked once, it failed the second time. So these things work sometimes and they fail sometimes. So which is why that confluences is good. So now let's look for a third confluences. A third confluence. Okay, let's say we choose chart pattern. There are different chart pattern. There are different chart pattern. We have double bottom chart pattern. This is double bottom chart pattern. We have double top chart pattern. This is double top chart pattern. We have flag pattern. Just browse on chart patterns. A lot of chart pattern will come up. We have flag pattern. Flag pattern is like this. Flag pattern is like this. Just browse on it. When you browse on it, whichever one you like and you study how to trade it, whichever one you like, then you trade that one. So I'm going to be explaining double bottom and double top chart pattern because that is the chart pattern I trade. That is the chart pattern that I myself trade. So that is what we will talk about. So let me explain chart pattern before I merge everything up together using the chart. So how do you identify chart pattern on your chart? Just looking at your chart, you identify chart pattern. Here, there's a chart pattern here of double bottom. Look at it here. If you look at it very well, markets came down here, went up, came back down. It's a double bottom. Double bottom looks like a W. Why double top look like an M? So whenever you see W, you know the market is making a double bottom and the next thing is going to buy. Whenever you see an M, you know the market is making a double top and the market is going to sell. So this is a W and the market is looking to buy. What happened? It bought. If you entered the market, if let's say you enter the market from here, put your stop loss below the previous low, what happened? You made money. This is your 2 to 1. You made your money, you go. But some people might decide to catch everything and look, you made about 5. Just say you reach $1, you get $5. You reach $10, you get $50. People with big capital reach $1,000, they are getting about $5,000 to $6,000. So that is just it, your risk reward ratio. So everything, what I'm focusing on is just merging all these things together for you guys to be able to create a strategy of your own. Just go learn something. There is a lot of tools here you use to trade the market. Everybody have their own. I'm just showing you the one that I am using. So just learn something. Once you learn it, back test it. If it works for you, good and fine, you use it. But if it doesn't, trash it. Find something else. So what I have picked for you guys now, what I picked for you guys is chart pattern. The three conference we are checking on is, the first one is moving average. The second one is trend line. The third one is chart pattern. There's a lot of chart pattern out there, so it's up to you to pick the one you want and learn it. So that is the three conference. So now we are going to merge these three together and see if we can get at least minimum of 3 setups, and we'll see the outcome of the setups. So that is just how it's done. You pick your setups, you pick what you want to use in trade, and every day you show up, you trade the same thing every day, trade the same thing. You'll be wondering what this dotted line is on my screen. These are section breaks. So that's not what we are talking about today. So now we have our EMA on the chart, which is the blue line you see going up and down like this in a form of waves. So that is it. So our moving average is there, our trend line. Now, how do we make the trend? We look for peaks and troughs. So let us go back. This is just how you back test. You go back in history. So back in history. So how do you pick a trend? Let's start from here. At least it must have 2 touch. So from that point, I read that is your first touch. So there's second touch here, third touch here. So once you get 2 touches, your trend is valid. Your trend here is valid this way. You can draw another trend from here. Is valid here also. One touch there, multiple touches here, and again. So as you can see, anytime market comes to touch that trend, it moves down to the direction you want it to move. That just has it all. So if your trend is coming from the upside to the downside, it is called peak. You pick the peak, at least 2 peak. No, if it's coming from the upside, you pick the trough. It is called trough. You pick your first trough, second trough. Those are the touches. But if it's coming from the down part to the up part, that means you pick your peak. So the down part, the points, those points you pick from the downside is called the peak, while the points you pick from the up part is called the troughs. So for example, this is the peak because it's coming from the downside. So I have about 10 minutes. So let me hurry up and round up. So there's 1 touch, 2 touch here. So let's see. Okay, I can see it's an opportunity here. Let's use this for the opportunity. So our strategy is moving average, trend line, and chart pattern. So here we have 1 touch, 2 touch. Our trend line is valid here. Let's zoom in to see if our moving average and chart pattern also will be valid. If 3 of these things form, then you enter into the market. But if it does not form, then you let the trade go. That one is not for you. But sometimes your emotion will play with you and you'll be tempted to enter. And if you enter, you lose your money. So, but sometimes luck might favor you. So that's it. one touch, two touch. So this is our moving average here. So the market is busy consolidating around the moving average. It's not giving us a clear or verified entry reason for that moving average, but our trend line says it's good to take the trade. And our chart pattern, look at it, it forms here. Look at it. If there's a W here, which is double bottom, as you can see. So our moving average, our trend line supports it, our chart pattern supports it. So now we are hoping our moving average also supports the buy. So let's see. Our moving average is just consolidating it on that position. But right here, it was saying sell, but here it's consolidating. So you can decide to leave this trade because your moving average was against it, which is your indicator was against the buy. But if you decide to take the risk and say, okay, my chart pattern, which is W or double bottom form, and my trend line form, and you decide to enter the trade, then your chart pattern form, your trend line form, then you look for an entry reason. That is also another thing. You don't just enter the market like that. You should have a reason. Why do you press the buy or sell button? So let's say your entry reason is a hammer candle or a momentum candle, and the W formed here, there's a lot of entry reason. Right here, there's a hammer candle for you to enter into the market. Right here, there's a massive momentum candle that says it's time to buy. So let's say you get in with the momentum candle here. Then you pick your stop loss. Your stop loss below the previous low. So whichever one is comfortable with you. See, this is the previous low, but this is the lowest low the point market came to before it started pushing up on the 15 minutes time frame. So there's also what we call a top-down analysis, but that is for advanced traders. So, but for now we are dealing with beginners, so I'm just merging up what you need as an example to start trading. So if you enter the market here and your stop loss is below this previous low here, and you put your target 2 to 1, you risk 1 to get 2. You are not greedy. Only greedy people will be risking 1 to get 5, 100, 10. But some people are good at it and they are profitable with it. So whatever you want to do is your choice. But me, I usually risk 1 to get 2. So you see, immediately you enter, the market moves straight to your take profit. You made money on this trade. Easy peasy. So you see the confluences I use here. With 3 of the confluences, trend line, cycle level, and trend line, chart pattern, and moving average, it's profitable. So this is one setup. Let's see if we can get another setup. Let's see if I can see another profitable opportunity. Okay, let me draw my trend from here. I see 1 touch, 2 touch, 3. It was broken here, so this trend became valid. So let's see from here. Okay, this is another setup. You can notice market has been hovering on the upside around our moving average, but moving up and down, consolidating around there. But ultimately, the market is trending upwards. So our moving average is verified there. And your chart pattern, what can you see here? As for me, I can see a part of W. If you see it here, W, our chart pattern for buy form, which what happened? It bought again. So our two confluences now is from moving average, chart pattern, and trend line. Is the trend line met? Yes, it is met. One touch, two touch, this is the third touch, and you buy. And what happened again? We are profitable. Again, let's look. If you don't just buy anyhow, you look for an entry reason, a reason why you press the buy button or the sell button. Here, what entry reason formed? A hammer candle formed here. So you go in for your buy and you put your stop below the previous low, which is here, and you target 2. Risk want to get 2. Look at it, risk reward ratio. This is actually 2.5. So the risk, your risk one you got to which you are profitable in it. So that is it. So we got 2 trades using confluence of moving average, trend line, and moving average, trend line, and chart pattern, and both trades was profitable. So when you have confluences, it makes your trade more profitable. But if you are using only one entry reason, then your trade will be hitting more of, I won't say, but everybody have their different way of trading. But you need confluences, not one, not two, but minimum of at least 3 to help you get into your trades, and hopefully you'll be profitable. So this is our conferences. So right about now, I only have 2 minutes left with you guys. So I'm going to be ending the class right now. And this is the last class I'm having. So you guys should do your own research and use the little idea knowledge you've gotten from this and practice by yourself. Learn their different chart patterns, flag, rising wedge, falling wedge. Learn what you want to learn, practice it, back test it. Once you find it's profitable, before you put in your money to trade. So how to enter and execute a position on your MT5, I would record a video of that on my phone and share with you guys on the channel, on the Telegram channel. So thank you all and God bless. Until next time, and hopefully one day we all get to buy our Lamborghini. Love you guys.